Focus on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming into June 14, 2021, and the stock market is going to break out, or it might break down, but we have a big event with Jerome Powell, and you are getting a lot of economic data, and I really think this is going to be a pivotal week for some of the meme stocks. Tie this into the broader rotation, where we're at the next 2 quarters of the year. It is going to be exciting. So we got a lot to talk about. I want to go over what happened in the market last week, how it's setting us up for this week, the plays that we made last week. We actually made quite a bit. I made a pretty cool debit spread. I want to go over that one. Some people have asked questions as far as debit spreads are concerned, and then we need to go over the plays that we have for tomorrow and the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the play, see the plays, watch the watch list come to life, and yes, if Papa or Brady are acceptable terms when referring to the chair of the Federal Reserve, then yes, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to chat, baby. And please do not forget, this is the random account generator. Today is Sunday, tomorrow is Monday. That's usually how it works. But what we ask from you kindly and please and thank you, post a random option trade in the comments below. Strike price, expiration date, all of that below $100, preferably with time, but we'll accept anything. And we are going to buy that play arbitrarily with the random comment picker in the morning. We've done this for over a year. We started with $500, have not added to this account, and it is still holding up. So shout out to chat, baby, and post your play, and thank you. So right off the bat, like we said, there is going to be a lot of economic data this week, but the main point is going to be Papa Powell on Wednesday, and depending on whatever he says, that is pretty much going to give us the fuel for the breakout or breakdown. We will talk about it a lot if some of you are kind of unaware what to watch for. The real big topic is obviously going to be inflation, the CPI, the level that it's at. But what a lot of people have been talking about lately is this tapering. Is the Fed going to be changing their bond buying program or any of the other facilities? And another factor to watch out for, this may get asked in the questions. People might want to know about the repos, but the two main topics here is what is the future path forward? How does this change their guidelines? And that is essentially related to, is this inflation bad or not? That's all titled into the first category. And then the second thing everybody is going to be looking for, are we going to get signs of tapering? Have they been thinking about tapering? Has that conversation gone forward? Remember, we heard from Yellen and all that last week, so those are going to be important factors to watch. Now, you are also going to be getting a lot of other economic data. You're going to get industrial numbers, real estate data, the housing index, new home starts, building permits, and then you're going to get all the manufacturing indexes. So there will be a lot, and again, we are coming off of that CPI, so all of that data is going to match up. And remember what we did kind of a few weeks ago, we were going over the CPE. We still have not got that one out either. So depending on after we hear from the Fed, we move forward, it's going to be a lot of back and forth. So this economic data will be key to watch, especially as we're hanging around near these tops. So that is going to be the main thing to watch this week. We really got to keep our eyes on Powell, but now you are also going to be hearing about the budget a little bit more. And we saw that come into play last week, but now the real stance we get from the Fed, that is probably going to be the bigger factor with up or down. But now as far as inflation is concerned, any big policy changes, that could kind of tie back into what the Fed's doing. But the best part about it, you're going to get the Fed's decision first, and then the policy is probably going to give us more information to look at down the road. So keep your eye on that. We'll be watching the news. I'm sure we will get a lot of that news throughout the week this week. So keep your eye on that. Then as far as the meme stocks are concerned, ladies and gentlemen, it has been an interesting interesting month and even just the last 2 weeks, pretty much like a month and a half. But this is really getting to the moment of truth because we saw a lot of volatility, what I was talking about a little bit earlier, where if you start to see some of these stocks even drop 30, 40, 50%, you saw Clover last week, even AMC, and they actually closed really, really good. And that's why I'm saying it's at the moment of truth, because not all of them look the same when we get to the plays. I will show you a couple, and this is really kind of going to determine that widening out here, and we're going to see, or maybe it turns into one of those more slower grinds up, or if we still see volatility, that could say a lot too. But they are definitely going to have an impact this week. And get ready for Powell, baby. He is probably going to say something, or they're going to ask him about this. Remember last time he's brought up things like frothy and all that, and we've seen them react. So even if you are just trading the meme stocks, Powell is going to be important for you this week, baby. So keep your eye on that. And then finally, like I said at the end of last week, I really like this idea. We're going to even go over the plays. I'll show you what I did with it, but watch some of those big growth names. A lot of the FANG stocks, I think they're going to pretty much carry the weight here of the market, where you'll get a rotation, but not a full rotation. But some of these stocks have not moved for the last 8 of 12 months. And now if they might be able to move here, if the other names that were kind of going did not get some steam, you get the approval from the Fed, or it looks like there's more sustainability or timeline ahead as far as inflation or changing policy is going to be concerned. So I really like these names. I made a play on them. We will go over them, but depending on how it plays out, this will even tell us a lot, because that is a big, big source of strength in the market. So those are going to be the main keys. We have Powell. We know what to look for. There is still going to be a lot at play, and I'm sure a lot will be surprising, so I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got a couple different plays. I think about 4, and then I really have a cool debit spread I want to show you. It is only for a certain situation, but as far as the first play, that first one that I made on Friday, I really like it this week. I did go a little bit big, but Amazon. So I like the big tech names like we just said in the keys, but one thing I really want to look for is, can we capture their earnings and get ready for that? But this is what I'm showing you here. This is a 1-year chart on some of these names. They all moved around this quarter in June and July, and then they pretty much held this level. So this is that breakout I'm looking for, because you compare this to the SPY or NASDAQ, you definitely see a different 1-year chart. The markets have caught up to some of these big names. So if we are going to get a breakout or anything, all you need is these names to move, believe it or not. Remember, that is what categorized the market the year, 2 years before all this. So that is still in play. They're still holding up. But now as far as the play to see what I did, we got to come here to the history. You guys can see everything. We got a lot there. But I grabbed 2 Amazon August 20th 4,000 calls. They were at $15.27. So I spent about $3,000. So I did spend a lot more because I wanted a decent amount of time and I wanted it somewhat closer to the money. Again, this is a 4,000 call. You're at 33. So that is still about a 20% move, which is a little bit out there. That is about more than 2 standard deviations. But the idea is, as long as we get earnings, I should be able to make one of them free, if and only if I'm right. And if this thing does start moving up and we ride it out till earnings, it'll probably be better than not. But now as far as their earnings, that is going to be on the 28th of July. So those contracts cover it. You can see what I'm saying. If you ever come up to TD Ameritrade, you click the Analyze tab, put in the company. Oh, wait, that's Amazon. Oh, wait, that was McDonald's. But yeah, July 29th, you put in the name, and then it will show you this chart as well, too. So even their earnings in general, what they've been reporting, it has even been outpacing earning expectations. So I think it's going to be a good one. And then when we come to the contracts, they are down, but they have moved somewhat off the bottom here. So we will see. This is mainly because the time decay, and like we said, this is about 20% out of the money. So I want to play the momentum, even set up into earnings. This will be a longer swing trade, but we know where the market could get some steam here. And if it does, it might turn into a very nice free earnings play as we set up. You guys know how we play it, but that is going to be the first play. As far as the second play, UWMC. So I'm still holding all of the shares. We really like this, and this is really only going to be a play if there is volatility. So keep your eye out for this debit spread, because you can see how we did it. And then once the stock starts moving, the debit spread is not that cheap. So if you don't know what a debit spread is, instead of buying a single option on the chain, instead of buying just a call, what we do is we buy one call closer to the money, and then we sell another call. We short another call to collect the premium further outside of the money. And what that does is it caps the gain on a call, because when you sell another contract, that is pretty much saying, okay, if it goes past that point, I cannot take the profit. So there is some drawback to this strategy, but the benefit, it allows you to get in on some of these plays for very, very cheap. So I'll show you the play that we made, and we really noticed this a lot. We've done this a couple of times. You guys have seen some interesting trades. You even saw how we took advantage of the premium on AMC. Go look back. Those premiums are not as high as they were. So when you get this volatility, you could actually take advantage of it. And this is what I like, because I was able to buy this debit spread at 15, 16 cents. But even throughout the end of the day, and as the chain starts to adjust, and then the further out the monies become cheaper, the closer ones kind of stay up there, this debit spread will become a lot more money. So you don't want it when it's expensive. And this is why I'm saying only if you get volatility on UMC or UWMC. If it does keep going up tomorrow and gets a lot of this volatility, this is different than playing the shares if you want to make a move on it, but the options are expensive. You could do a debit spread to make it a little cheaper. Essentially, I bought the $15 calls and then I shorted the 20. I did 100 of them, so I spent about $1,500, $1,600 on this play, and by buying the 15 and shorting the 20, I could only make the difference between $15 and 20, which is $5 per contract. Times that by 100 contracts, that's $500. I believe the max gain on this play is about $40,000 off of the $1,500, and then if I'm wrong, I would lose the $1,500, or if I want to break even, UWMC by about July 21st has to be at 15.16 or 15.15 what I paid, just for me to make my $1,600 back in intrinsic value. So it's a very interesting play. If we pull it up on the chart, you'll see what I'm talking about. Again, I was able to buy these $15 contracts. UWMC has had a lot of volatility. It's a short squeeze candidate. They're talking about it on Wall Street Bets, and we bought it way back in the day because we love the dividend, baby. But if you take a look at these $15 calls, again, I paid 15 cents a contract. What did I sacrifice was the unlimited upside. So if it goes to 15, if it shot up to 30, 40, and I just bought this contract, I could make all of that dollar for dollar. But since I decided to short the $20 contract, I'm giving up the upside. I'm having a defined or a fixed gain, but now I got to pretty much play that $15 contract for 20% of the price. And this is why I wanted to do that, because 3 or 4 days ago, these contracts were going for like 7 cents, $7. So if I'm buying them at 1,000% premium, it already has risks in general. So now, kind of later stage, there's this run up. It's going to be the moment of truth for some of these meme stocks. So using a debit spread here, and because the IV and premium was high, I was able to take advantage of it. And this is what I'm saying. By the end of the day, you saw how the stock moved. We got it kind of here in the middle, then the stock goes up. But if you bought this contract at 60 cents and then you wanted to short this one at 30, you're literally paying 30 cents per contract. I was able to get that in there at 15. So when the volatility is high, you could take advantage of these debit spreads very, very good. But again, none of this is a recommendation. Option traders will be risky. There's almost financial advice. There's financial advice. Occasional purpose only. Think of one day. But in all seriousness, practice with these debit spreads before you do it. Or if you are going to do them, don't make them too big if you don't understand, because when you start short selling contracts, a lot of people will get confused by it. It'll show you different, like, oh, wait, am I up or down? You have to know it is a defined risk trade, so you need to know the best way to play that, and that's usually wait it out till expiration or if it gets in the money. But again, if you do not have experience with this, go look at our tutorials. We got a bunch of them. Go search the Trading Fraternity debit spreads. Ask a chat in the comments. They will gladly post the link, but you want to get experience with these before you jump head first, and once you do, it will offer a really, really good trading tool in your arsenal. So I really like that play. Keep your eye on that one. That one's going to be fun to watch. That is the second play. The third play here is Nvidia, baby, and they are at a breakout point. So they broke out. They're looking like they're at the top of their chart, but you could kind of see it compared to last week. They had the run up. They got the split approved. It hanged out around here, but now it's starting to break out into all-time highs. The contracts, we were looking at them the other day. We still have that one that we made free. It was up a lot more. The fact that it came down, but now the stock is moving, this could create an interesting opportunity for some of these plays. So I'm going to be watching Nvidia this week. Again, even look at all the other chip makers. I want to watch them, but noticing how Nvidia is kind of outperforming there, that is a really, really good factor, and I like how they're holding up. So I'm really going to keep my eye on that one this week. And then finally, this last play is going to surprise you. The real estate guys gave me the idea. I think it really aligns with how I'm viewing this week, the moment of truth. It is a very, very crazy play. It's related to the short squeeze. You guys are going to get your mind blown here. Are you ready? The final play I'm going to be watching this week is going to be Nikolai, ladies and gentlemen. Yes, Nikolai Motors. And why? it is so bad that it's good. That is only if we see the short squeezes continue, but this was a discussion we talked about last week with Ride, and it even reminds me of Workhorse with a little bit, and this is why I'm saying, if we get that small cap exuberance, if the meme stock rally continues, and I will bring up some of these plays so that you can see them and see what I'm talking about. Some have held up better than others, but this is a phenomenon that I want to see how this plays out, really. But this logic started last week with Ride, Lordstown Motors. They had that bad news and the stock dropped, but then it had a real reason to drop. People are like, okay, they're not raising their money. They short the stock drops on the bad news. It had a legit reason, but then people started talking. They're saying, wait a minute, what happens though if it gets highly shorted off of a real legit reason, and then it gets short squeezed off of that? And then I was even thinking about Workhorse. Remember, we saw that last week, but I did have this similar logic, but we think Workhorse is a little bit better. They just had the rumor of that thing getting challenged, but remember, it was shorted off of just legit bad news, and that's why I'm thinking even Nikolai here, because I think this company has a reason to get shorted. But now I've had a lot of people bring this up to me, and I've been hearing this, and I'm like, well, I could kind of see that it's so bad it could be a good short squeeze candidate. So the real estate guys made a play on this. I'm going to be keeping my eye out for this one. I'm interested, but I'm going to use this kind of as a barometer, and it really does depend what we see for the rest of the week. So those are going to be the main plays. As far as everything else, again, watch Amazon, Facebook. Facebook has been leading. Amazon is the one that has stayed within the more tighter 12-month range. Keep your eye out for them. Watch the commodities. Again, oil had a killer week last week. Please do not forget about that, because it is at a very interesting level. We've even talked about the relation here to commodities like steel. A lot of you have even brought up copper, and then the precious metals, gold and silver. So coming into the Fed, any of that stuff, I think it's going to be key. But if you notice, those premiums are up. Those X plays that we made last week, even though it kind of moved a little bit weird, it eventually broke out. Those plays are up 100%. I'm going to be watching that. Going to be watching VLDR. Remember, we bought the 1,000 shares. I'm down on the shares, but this is the part that really got me here, because after this drop, I got in at 11.30, but remember, I bought those options as well, but the options are still holding their value, which is pretty interesting. And again, this is all tying back into the meme stocks, because this one, I don't know if this is a meme stock, small cap, whatever you call it, but I like that it had the potential for that hype as well as just the general industry. So keep your eye on them. Oracle, again, I was looking coming into this week, what is holding up? Where are the premiums? You could compare it from Nvidia to UWMC, all the way down to even Amazon in the play I just showed you. But now Oracle, these plays are holding up a lot even after this drop. This has been one of those growth winners. So coming into this week in the Fed, I really want to watch how they play out. I think they will be very interesting. So watch them. Watch the bank stocks. You saw last week, it was interesting. Again, Thursday was bad. Friday, they recovered a little bit, but banks have definitely been a leader. They are really important with everything going on, especially tied in the Fed and all that. So if we see the continuation, or if you see weakness, I really want to keep my eye out for that. And then Ford, they had that good week. They've been leading up. They've been selling all the time. They kind of got stability here around before they broke out of right above 15. So if that holds and they could do good, I really like that one. We still have the red in the play. We got our shares, but I really want to watch to see what happens, or maybe we even get some updates on the F-150. There's Nvidia. Keep your eye on them. You see how they're looking at the chart. I also want to watch Intel. It looks like it kind of wants to break out here. I like it for even reasons, even in the long term in general, but there is some other plays. You also got a couple of X dividends. You're going to be getting UNH or TSM. I was looking at TSM because it's chip related, but also factor in how you're going to see some of those X dividends play out. But watch them. UWMC, I like it only if there's volatility. I think we could get some pretty cool deals on the chain. Workhorse, and this is what I'm saying. You see it kind of bounced off the bottom. They finally had a bigger drop. It has been holding here, but it looks a little bit weaker compared to some of its breakout points. And then we come and bring up Nikolai here. You see how this one's held up a little bit, getting a little bit close to where it started at the beginning of the year, or I think it's right up there. So even compare that there to Workhorse. Workhorse is below that, so you're seeing a different degree. Another one I like, and this one's a momentum one. See, this one's right there, but a lot of people talked about it. I like this company in general. So as far as even the meme stocks, I'm going to be watching FUBO. I will keep my eye on AMC, but Workhorse, Nikolai, FUBO, those are the ones I really like. And then Roblox, you guys saw it last week. Kind of looks like Ford a little bit. It was a breakout leader, stalled out. It kind of got the base. We made the options for this week, so we're definitely going to be watching that one. And however that one plays out, that one will be very key. And then finally, ladies and gentlemen, TLT. The yields are still low. Low yields means higher TLT. you're coming into the Fed. It's either making a move before there, but even after the Fed, this is going to pretty much give us a new inflection point, or the first one to start this next 6-month cycle. So keep your eye on them. Again, this is pointing to the opposite of tapering. Not really what we expected, but this could end up being good. We want to see how the market takes it. You see both ways. The premiums got clapped on both sides, but you're also noticing that given this velocity, the other contracts are still moving. So really, they're getting decayed over time, but the fact that it's moving quickly, I think something's going on there. And the final point I really want to watch, you want to see if the dollar starts to break out as well too, because like we said, you're watching the bond rates break out, but the dollar hasn't. This is still at that key level, but anytime we've had big sell-offs and then a pop in the dollar, it usually correlates with some bigger movements or a sentiment shift in general. So it's going to be exciting. We got Powell, we got the Fed, we got data, and depending on what happens, you are either going to break down or break out, baby. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to get the chest to the sun, baby. You already overcame. But the Cole loves you. I love you. I'm going to see you in the morning. Let's go.